Hey guys. Is everything up and running? Okay, cool. Let me make sure Epic Pen's working. Boom. Happy Sunday, everyone. Just kidding. Sundays suck. But good morning. Did you check out the scallop DD? Not yet, but I will. It is. Sunday is very close to Monday. How are things over on Reddit? I haven't looked. Lots of anti-options talk. I just avoid it on the weekend. The new guy brought donuts. Be sure to grab one. We'll do. Thanks for the heads up. I'm not. I'm in live chat. I spent most of yesterday doing DD and learning. Why? What's up, man? Good morning, everybody. Hey, Han. What to do today? Do you get excited when you see Bob Smith DD and think, go little rock star? I don't know. Most of his DDs right now are just him publishing data that him and Turd have been working on, which I've seen in advance. But it's good. It's good it's getting out there. Put the cinnamon roll picture back up. What happens with the internalized trades from Friday? This is interesting. So, dark pool trades are supposed to be reported after 8 a.m. within 10 seconds, right? The issue with this is that they are not considered executed until both sides of the trade are fulfilled, which can be hours, right? And then if they occur on like foreign exchanges or dark pool trades that occur between 8 p.m. and 8 a.m., then they don't report for like 24 hours. So that's my current understanding of how FINRA handles dark pools. So the delays can be, brief, like 15 minutes till the execution comes through, up to about 24 hours. This is why like 1269 is interesting. It's 10 minutes after the like London exchange closes. What's up, Snickers? Reddit discovered something called options. Finally. The problem is it's like kind of too late. It's good for Wall Street bets, but like super stock might be a little late to the train. Like if they're just starting to learn now, like 3 months at least, so we start to see like intelligent options plays from like RSS. Not that we're going to see intelligent options plays from Wall Street bets, but with the delta neutral spike from Yaya that she was showing, and then most of the technical indicators seem to indicate we're about to go up big time. If people are really holding their options contracts and exercising their options contracts and not taking profits early, it can get very explosive very fast. Lots of Reddit posts reference you and they were positive. Cool. Yeah, everyone's gonna just like bandwagon it now, which is good. That's what we want. That's what we want to see. People seem to forget we didn't even make it through the entire Jan cycle last year. After January 28th, there was still more exposure to be had, but retail was in the dark. Yeah. Do you use your knowledge of market mechanics for any other stocks? DDS. Yeah, of course. Actually think that all the shit that I've learned since starting this whole GME thing has made me a better trader and investor overall, like significantly. Um, my like 3 month rolling average for profits on other stocks is like 240% higher than it was last year. So it's significant. You know how to make coffee, Carl? You just you just take the beans and put them in hot water. And then strain it. This makes me very bullish. If we miss this run, which I'm still positive on, they might play more cycles. It will squeeze at some point instead of the interest dying. Only if the vast majority of people profit from their options contracts. If nobody profits from their options contracts or the window's narrow and they miss it, all the FUD will come back and nothing will have changed. This is just a fact. I mean, they may not be making a market on DDS because there's no interest, right? It's not so much that they've just like stopped making a market because it will squeeze, but there may just not be enough interest for it to be worthwhile for them to make a market. Like other people that aren't short the stock, right, could want to make markets for it. There's just no interest. There's some like you can kind of there's a tactic you can use when you see that happen. Um I've heard people refer to it as like spoofing the bid, but it's not really. Um and so what you do is if you find an options chain with a zero bid and it's got like a spread to the ask of like $3 or something, right? Sometimes you can just place an order just slightly above this, like 0.10, for a significant number of contracts, for like say 50 contracts. And market maker algos will pick up on the order and just fill you. They'll just write you the contracts. It's tough. You don't really, it doesn't really work 100% of the time. But on a stock like DDS, sometimes those opportunities will present themselves. If you haven't spoken about it yet, what do you think about the interview with the Wall Street dude regarding the shorting and the power of options? You mean the one with Charles Gradante? I mean, it kind of just confirms what I said about the January run-up. And is in line with what, you know, Peter Fee said back in February. Fuck it, I'll just drink pre-workout and sit here with tingling heart palpitations. Potential odds that once GME goes, DDS is likely to follow. It could be that once DDS goes, GME is likely to follow. If these FTDs start coming in hard and fast, DDS will squeeze before GameStop. It could actually be like a catalyst for GameStop, as a matter of fact. DDS is primed for a squeeze. Like, it's like a stick of dynamite and the fuse is very short. Even GameStop has more liquidity. The bid-ask spread on DDS hits like $6, $10, $5. The problem with it is that there may not be enough interest for the squeeze to really be a lot on DDS, right? Like without FOMO continuing to drive the squeeze up, it's just shorts banging the price up until they're out. And there's not a lot of shares, right? So there's not, so when the float's too small, squeezes don't have as much potential, right? Like GameStop has 69 million shares worth of over shorted minimum potential. Whereas like DDS has like 6 million. It's hard to say. Again, you can't predict the scope of a squeeze, especially with the bid-ask spread that wide. The problem is, yeah, it would be very unstable. Like if it does squeeze, it would be very abrupt and fast and over quickly. I'm going to make myself larger so the things I say sound more important. There we go. Thanks. I do have nice pores. Whoever edited me into the Prince of Persia movie, that was dope. I think it's your modesty I admire the most. I wasn't taught to be modest as a child. I was just told I was incredible by my mom, and then I believed it. That sums up my entire personality. Some poor sap on RSS is going to have their first contract during the big run up and spend the rest of their life chasing that return. Yep. I think the most important thing that comes from all of this is everyone's gotten bitten by the options bug. And that's what was missing for so long. For so long that, the FTDs almost stopped flowing. I see a lot of people on Reddit still about it being cheaper than just buying 100 shares. I know. No, they don't understand leverage. I'm aware. Does anybody know what implications, if any, of the GME volume being routed through NASDAQ, GSM, and CBOE EDGX? I mean, it should all still print to NYSE, Dunkston. Even if it's routed through other exchanges, like it'll still print to the time sales. We have EDGX and NASDAQ flow on the fucking WeBull. Thoughts on current call OI out past our Jan Feb exposure window? Eh, it's decent. A lot of people are piling into like Jan 2023s, which is awesome. Could the Thursday run up have been the first check of IWM FTDs? IWM's tricky. GameStop's no longer in it, right? But that doesn't mean that the obligations due to IWM don't include GameStop. This was something we saw in November with the spike on FTDs and IWM was far higher than the other currently GME containing ETFs. And that's because of those futures contracts, right? So it may be that like those single stock futures represent obligation for GameStop shares due to IWM. Even though IWM no longer contains GameStop, that doesn't mean that those obligations don't need to be satisfied, right? If we don't hit your personal price targets in the Jan run, are you planning to roll up and out to March or April, or keep your fibs? I'd probably roll up and out. Not too much up, but out. It depends. It depends on where we're at. I would probably just like capture profits, exercise anything deep in the money, and then move forward for February OPEX, which would be the next like positive or like up cycle. But, oh, this is just a hoodie, and it's because I was outside today and it was cold. Elena. If the squeeze thesis can be said to be a prisoner's delight, is relying on retail to hold onto long call options a prisoner's dilemma? I mean, yeah, in a way. But you don't need everyone to do it. You just need a lot of people to do it, right? We already know that the float's illiquid. And when presented the opportunity for significantly higher profits. I feel like people are incentivized. No one does anything without incentive. With FTD starting to pile in, do you think we're just going to get more after hour manipulation with cover up stories like last Thursday for the next few weeks? Some. You still have to have somebody like on the other side of that to help produce that volume, right? I think what they did Thursday was they drove the price up in after hours with the news. On the back of their false news story. To get people to drop gamma, right? This is how they dodge their gamma for next week. So they knew they had the FTDs. They knew they had to clear some of the delta sensitivity, which is spiking again from the options chain. And so they drove IV up in after hours and probably started selling most of the shares that they bought during after hours, right? But it spiked IV. So at market open, a lot of people's options were profitable, right? But and they sold, right, which reduces their gamma exposure for next week. It's a smart move, especially if they know they have covering to do next week. This is why like ironically diamond handing options on GameStop is so advantageous, because you can, by having those long dated calls, you can ride out shit like this without paper handing. And the longer those calls sit on the chain and the more delta value they accrue, the more fucked they are. All the price action of the last 2 days affect FOMO? I don't think it will too much. People know stuff's up. The people in this community are conspiratorial enough at this point that, you know, they're not going to be fooled by like short-term price manipulation like that. While slamming the price over several weeks has a negative psychological effect. Doing that briefly doesn't really affect us much. What would the bid side empty while forced liquidation occurs and peaks starting being traded? The order book will be highly erratic. I mean, they'll try to set low limits, but if they can't get fills, they'll have to bump it. Sorry, but XRT gonna run, you think? I think so. I think we'll start to see some price improvement on it at least. I think. Might they run the stock early to price out the rest of people from options? It's possible. I mean, they were definitely successful Friday in getting people to sell out of contracts, right? If those people haven't bought back in, right, and they start to run it pre-market Monday, by market open, they could be priced out. What do you think was the cause of Thursday's run up? You see this thing that caused the spikes in Feb and November 3rd? You mean FTDs? The February run, John, started on the OPEC date. November 3rd was ETF FTDs. Very pretty President's Earth. So there's usually a T+2 correlation between upward spikes and NASDAQ GSE volume percent and GME price improvement after. Usually after hours movement on day the price spikes. Interesting. I mean, that part might be part of how they're internalizing, is they internalize and then reroute in order to create a delay in the buy orders. You know, I haven't really watched a lot of Jim Cramer, but what I know of him, he wants to be right, right? And so he's constantly chasing the next big thing. Most of media will want to be GME positive if it runs, because they look good, right? So they'll straddle that fence between bearish and bullish. If they get a positive reaction to bullish articles, they will continue to print them. Because they don't ever want to be caught on the wrong side. Right? They'll be bearish, you know, in the hedge funds' favor as long as that's a story that they can write. But as GME starts to move, and you'll notice as we approach these windows, they'll start printing more and more positive articles on GameStop. It's pretty common on a lot of stocks. Because if they appear to be bullish on GameStop and GameStop runs, they get more viewers and better ratings. If there's anything resales get out of the options, it's holding them till expiry. This is true. Last year they turned off the buy button. What fuckery should we be prepared for this year? Breakdowns of the fast system, or the call lines as people are trying to exercise in mass. Of course, brokerage outages will be fairly common. I think the biggest FUD or issue we could run into is if CS has uptime issues. Or yeah. I think that would be that could cause some panic. It did a little bit, and they were only down for like an hour or two on Friday. Is Trash Dan even here, Carl? What's up? I hope he is. I'm just gonna stare at him for the entire time. What's up, man? Does anything retailers get at? You just answered a question I was about to ask. So do you still consider Feb 18 somewhat far dated? I think they're far enough dated. Yes. They're out past all of the exposure. They're the first options date that is. Obviously, anything further out is safer. But that's the safest, nearest option. Because, cost has to be considered. Thoughts on RC and the Jimmy board coming out with statements to correct the false narrative. I hope they don't unless they're ready to. This was definitely crafted in a way to try to get them to announce early. This was well thought out. This and everything that happened from Thursday after hours through Friday close was very well orchestrated. The NFT news articles, bullish to explain away price movement, the negative press releases on the fake marketplace news saying that the NFT thing was dead already. The pressure placed on GameStop to announce before they're ready. The spike in IV to get people to get out of their to get people to drop the gamma that the market makers are exposed to. I mean, all of this orchestrated, right? Carefully to maximize impact. I think it was moderately successful, but I think most people had far dated options calls and just sat on them, which fucks them. It puts them in a very bad position because I think they were hoping to get rid of more of the exposure than they did. I also think a lot of people bought Friday. No, the MM can't do that. The clearinghouse still has rules where they can set the bid. And somebody would have to fill that bid, not Saculon. Last year, Jan 12th, Jamie traded 7 million volume. Jan 13th, it traded 144.5. Is that equivalent to T plus T this week, the 11th and 12th? Yeah. Same period of time. Same ETF FTDs do. Higher delta sensitivity now, actually. They might have. They might have started covering some FTDs early. Yeah, that's a big risk. Big Dilly style. They probably won't do the same thing twice. GameStop has released holiday earnings the second Monday of January the last 2 years. Think we'll see it again, maybe. Ryan Cohen was not in charge of GameStop last year when they did that, so maybe not. We'll see. GameStop has released holiday earnings the second Monday of January the last 2 years. 11/3 was T plus 6 on the 1025 T plus 35 of GME's futures. On 1025, XRT spiked 75% off exchange volume from the 17% the day before. Internalization? Likely. Yeah, I can. I was scared from the options since the beginning because it says options carry infinite risk and you can lose all your money invested. But now I'm a degenerate You can't lose. I mean, you just lose your premium. I mean, a stock, a share, right, can still lose 100% of its value. Both have infinite upside. But the premium cost per share is much lower. So, you know, if you're buying an option, it's 17.20, or you're buying 100 shares of GME at a basis of like, 135. Theoretically, the shares carry way more risk. It doesn't play out that way, right? Like a stock's not going to just go to zero. But so I should draw my guard for this week or stay clenched. Watching them hammer the price so much trashed its toll. I was going to sell FebC's Friday open and buy it after a dip. Good I didn't. Seems good. Yeah, I didn't sell any of mine. I held. How do you feel about buying a 1-2 DT put to lock in profit on longer dated call if there are problems dealing with brokers? Hmm. Do you want to rephrase that? Like what explain the scenario you're talking about. Two of your OG mods have birthdays this month. Does that make you even more jacked? Who? I know Zakire's birthday is coming up. Are you concerned that 12 million pancakes? Oh God. Could you go over what kind of price action you expect tomorrow? Expect? I expect up. I expect a lot of FTDs to be due. I expect some of the internalization from Friday to roll over. What will happen? I don't know yet. It's getting volatile and unpredictable. We traded more volume yesterday than we have since August. That's I'm buying 1DT puts. Okay, that's already just coming in. How's it going? What's up, Dominic Joseph? Jokes on them. My calls lost so much theta already. Even with the IV spike, my calls are still underwater. Is there a possibility that they somehow managed to dodge the Jan 21st GEX? The GEX should be substantial considering a lot of contracts could have been purchased when Jamie was at $30. It is. Don't forget the gamma exposure from the ETFs as well, Super Hot Kitty. It's GME and ETF leaps for the year. There should be some pretty significant exercising going on, although our current price is very low. If we don't run a lot before January 21st, The gamma exposure could be minimal. I don't think 200s are too far out of the money. I think it's a very, I mean, think about it this way. We hit a million volume in after hours and went up to $176. It's not like it takes a lot to push us up above 200. Anything interesting you've been looking for this weekend? No. I lost one of my socks. What kind of volume are you expecting for this cycle? Even 10% of last Jan Feb volume of 2 billion is 200 million. I have no idea. Yeah, the difference is so drastic at this point. There's no way to tell how much volume we're gonna get. Even yesterday, like or Friday, it was totally unexpected. That was a lot of fucking volume, and a lot of it was internalized. That was far higher than I would have expected at any point in this cycle for one day. So it's already looking like we're going to see fairly significant volume moving forward. Oh, nice hand. Ew, why would someone come in a sock? I don't understand why people do that. That's fucking disgusting. I tricked you into giving your sock to your house elf. Now you have to cut your own steak. I'll just get another house elf. Does it concern you with the number of mod birthdays this month? That most of your mod team will need new livers soon. I mean, if they die, I'll just get new mods, right? That's how you handle that. Yeah, there's been a lot of ETF shorting besides XRT. If you look at Turds posts, you can see the flow data for BlackRock and Vanguard ETFs as well. Are you going to school or did you withdraw this semester? My classes actually start in 2 weeks. 2 weeks? Almost 2 weeks. But my course load is minimal and it's at like 6 p.m. So we'll see if I can do it. If I can't, then I won't. I took too long deliberating and couldn't get a refund, so no, I don't think XRT being thresholded is insignificant. It's it belies a much larger problem. Maybe I don't know if we need to. I don't think retail is really in a position to diversify and apply pressure other places. Funds will do that. Oh no, I'd bail on school first. I don't really need to go back. I just was bored during the pandemic and so I signed up. This is my first time all my GME calls have a 0.3 delta. So used to seeing 0.05 and below. Nice, dude. What are they doing when they internalize volume? They're printing the order to their own margin, essentially. So they buy a bunch of shares in aftermarket, bring the price back down because of the low liquidity, right? So say they bought those 1.5 million shares here. Then the following day after market open, they can, while retail's FOMOing in, they can sell those shares to retail, right? Without having an effect on the lit exchange. They all have kind of equal amounts of unknown upward pressure, Al. Um, there are certain things that I think have more pressure than others, but I don't think any of it is just one specific date, right? Because our upward price movement puts pressure on the following days. Right? So the more we go up initially, the more pressure it puts on the entire cycle. If you look, let's see. If we look out here, like so we're coming into Monday where we have this first big spike of ETF FTDs, right? But then we also have GME FTDs coming in 2 days later. So, price improvement here puts more pressure on the FTDs here. We have a constant flow of ETF FTDs coming in here and overlapping with the December FTDs there, right? We have market maker FTDs coming in this entire time. So the more the price goes up, the more pressure is applied to every later part of the cycle. If that makes sense. FTDs aren't done until February 14th. Server mystery answer. How to step away. If problems, contact brokers while at 250, 300 while trying to exercise 160. What about buying, say, a 220 put with a few DT for insurance? You mean in case they tank the price? I mean, I guess you could. Don't get me wrong, there's a downside of these cycles to play as well. The problem is IV is going to go up, right? And then as the price comes down, IV is going to crush, which makes playing the downside a little less profitable because of the way they intentionally crush IV as they bring the price down. It's very slow, right? Like they generally don't drop the price hard enough to spike IV. I'm pretty excited, Trey. This big spike was on GME FTDs on the GME FTDs date last year. Do you think it changed for this year? No. Bob and Turd's data seems to show that the FTDs are actually higher this year. If Citadel is taken out as MM, is Virtu enough to step in and run it, or would other names stop propping up and taking over the MM position? I mean, Virtu is big enough. Like, they're huge, without a doubt. There's also Goldman. Although Goldman doesn't really handle retail trading, they could. I'm sure they've been waiting to. How long does it take an MM to hedge the delta on options? Can they maybe delay hedging to keep the price from going up too fast? I mean, generally their delta hedging should be done algorithmically. But yeah, they could try to delay it, but by delaying it, if there's FOMO coming in, then they're experiencing slippage, right? So if they try to hedge slowly and FOMO comes in and spikes the price, then they've got to hedge up here, which is even more expensive. It's not good for market makers to not appropriately delta hedge. It's very dangerous. When can they no longer cover during after hours? I mean, what happened during after hours wasn't necessarily covering of anything. It may have been, but we don't know that. For all we know, what happened after hours was just like a liquidity test, like a pump and dump. So they bought 1.5 million and then sold them. They could have been trying to create orders to push FTDs through CNS. Remember, they only have until market open the following day. So basically, we have long dated calls. The game is to hold throughout and exercise when possible, right? Timing, getting in and out, maybe too risky. Yeah. Are you expecting de-hedging positive pressure on Tuesday from Friday shorting? Yeah, there could be some gamma exposure this coming week. I don't think it'll be significant, but it could be some, and it could present upward price pressure or buying pressure. Do you think there's a good strat in rolling options like you did in the June spike? Of course. I mean, if you're like up on weeklies, like I know a lot of people had weeklies on Friday and they sold market open and rolled out, right? And this is also something that they're probably not used to retail doing, is multiplying their delta, right? So if you had like 135s that you bought Thursday for Friday expiry because just a jump to max pan, those 10x'd. And then if you bought Febs in the later part of the day with those profits, you've just compounded the delta exposure for the MM by your multiplier in capital. So I think there's a possibility that they're even further underwater than where they started. And from the DMs I've gotten, I would say a lot of people had that going on. Thoughts on the puts expiring this month? Those have. I feel like I've told you those have absolutely nothing to do with anything regarding price action. They are just part of replicating baskets. They were bought last year. They're fucking worthless. They hold no delta value. They're just going to expire and nothing comes of it. They are not married put calls. And yeah, I've seen the posts on Reddit where people put the call OI next to the put OI. That's not how that works. Yeah, I think their defensive position was pushing the price as low as feasibly possible. Is there a link to this trading view somewhere? I can post it in the Discord. Here. These are ETF FTDs, Dr. Dank. I'm hedged by buying call options more than shares. Won't this crush price improvement? No, actually, what that does is that fucks up the variance positions. Because the increased interest in the call chain forces the variance swaps holders to hedge wider and wider on the call chain, which drives even more call OI. Similar to the hundreds of thousands of 50-cent puts we saw bought last year. Can you please explain more about CNS? What do you want to know? It's pretty simple. You have an FTD. It's either short or long. If they can match it up with a long or short order, you have no FTD. And this is, I mean, this is kind of like the same thing that widens the bid ask, right? If you have excessive number of short FTDs, then you need long orders to satisfy them, right? But, you know, if you have 1 million of these and, you know, 10,000 of these, you have to make up that difference. It's an excellent system unless they let the FTDs get out of control. In which case, then the system can't handle it, right? Is there a situation where the primes don't margin call because they don't want to unwind it? What's the motivation for primes to margin call? Primes will margin call if they see risk to themselves. They're not going to take on any additional risk, right? Discord was talking about 400,000 total interest needed for liftoff. I mean, that's what we had last year, but I don't think we need as much this time around. GameStop's far more illiquid and volatile than it was last year. We don't need equivalent. And the OI doesn't even matter, right? What matters is the delta. If people are last year everyone's buying like fucking weeklies with like 0.0 and 0.1 delta. And this time everyone's buying, you know, monthlies and quarterlies. with like 0.3 and 0.5 delta. And you know, as far as delta goes, this is, you know, 3 to 1, 5 to 1, 10 to 1. So using OI as a metric there seems silly when delta is what matters. What if you bought the top like a rock star, but totally did it to flex, not because I'm an idiot? Later, Psyche. Just, you know, here's something to note. When everyone's referencing that Samsara DD about how we're all a bunch of shills. God damn it. No, they only need to rehedge the variance swaps if volatility spikes through the fucking roof again, Tammy Busey. Yeah, this is why you don't sell your shares. Yes, it does. Okay. Which then drives the price of the underlying up as well. Even though it shouldn't, it does. Do you see that insider holdings have increased by 4.4 million? No, but I believe it. Don't forget, dark pool volume spikes are generally, when you're looking at other stocks, a spike in dark pool volume indicates institutional interest. So usually when dark pool volume spikes on a stock, that's bullish. This is from Citadel, by the way. Hold on, I gotta close this and reopen it. It's doing weird shit. Whoa, infinite Gurks. Chug for Han and Pigeon Whale. Cool. Isn't her birthday like 2 weeks from now? It's too early. What do you think about your old inflationary theory? Which one? About the primes? I think some of it's true. I think some of it's false. I think the motive behind keeping the interest rate or the borrow rate low is not correct in that theory. However, if the short hedge funds are forced to start borrowing from the SEC lending pool again, then I would expect longs to take advantage of that. Or the primes. Is your upcoming run-up strategy to C? Basically. I mean, what else am I going to do? It's not like I'm going to buy enough stock to create any kind of effect. Oh, this is... I see. It was a longer question. Is your upcoming strat for this round to sell a market indicator show it will stop running? Or what time will you assume is late enough to execute cash settle? It's a good question. Yeah, I mean, I have price targets for my options, obviously. Like, we know the upper resistances, right? We can expect turnarounds at 180. We can expect turnarounds at 200, 220, 250, 300, 325, and 350. So yeah, I'll be focused on the technical indicators at all of these price points. Is the overall market being stable in the upcoming month of any importance? Or is reaching the start of the cycle by itself enough to get GME going? I think the overall market stability is important, but not that important. Any more significant downs after tomorrow? There shouldn't be, but we're just as illiquid to the downside as the upside. If I want to go back and compare delta values between today and the relevant dates next year, which dates would you want me to pull the data from last year? I'll compare delta for date ranges. I guess last December. Last December 16th through like Feb 23rd. December 16th, 2020 through Feb 23rd, 2021. I mean, you would probably want to use stop limits, the same as the exit strategy. So if we were to like come up and test 250 and get rejected, you know, if it continues to fail below the previous support, it's likely coming to the downside. The issue with that is IV plays need to be sold nearer the top. So those would have a tighter stop loss or stop limit. And then more in the money calls can have a looser stop limit, like further out, like another, I don't know, 5%. This is arbitrary because we don't know what it's going to look like at the time. Jay, put their pickle in my drawer. Thanks, man. Like if we have a bull flag, right, up into a 250 test and we get rejected, like you don't want to set a stop limit here, right? Because it's likely to keep coming back up. But it could, you know, it could consolidate longer and you could fill there and then it could bounce. So yeah, that has to, yeah, that you can't predict that in advance. It's ridiculous. Oh, the inflation with the shorted shares. I know what you're talking about now. It's tricky. I think each share sold short has less impact than it used to. But that impact is strengthened by the fact that our bid ask is so wide now. So it's probably net even as long as they're sold in batches large enough to gap to the downside. So like each individual share sold short, I think has very little value. But, you know, 3,000 shares or 5,000 shares sold short, and if it's enough to gap us down, that makes up for the fact that, you know, each individual share doesn't have a lot of value. So I would say we're almost equally volatile to the downside now as we are to the upside. And this is something that's going to come with increased volatility no matter what. You just hope that buy pressure outweighs short pressure. Sorry, I know I just missed a Ko-Fi. Feb 18 160, a good play. Seems solid. I have a bunch of those. Can there be fuckery with the time it takes for them to deliver or exercise contracts if we do so late Jan at the optimal time? Could there be a scenario where exercise to fuck them, but then don't see their shares for quite some time? They only have T+2, or it's a forced buy-in. And then, can there be crime with the time it takes them to deliver our exercise contracts? Oh, dude, you didn't have to ask me twice. I would have checked it the first time. Thank you, Jay. Yeah, so no. The OCC and CBOE are very clear on their rules. You have to remember that an exercised contract are enforceable. Which means that if the shares aren't purchased within T+2, a forced buy-in will occur. That's why I said they're like a mini margin call. Like 13 million, Bones? Chart exchange showed 6 to 8 million short volume from T plus 35 for this week. Is it possible much of this FTD exposure was covered on Friday? You're forgetting futures as well. It's possible. We'll see. I think Bob's flow data showed about double that. Remember, shares sold from ETFs are not counted as short volume. So we can use that to track FTDs, Dunstan. But we can't use it to track ETF FTDs. What FTD data were you talking about? When? Are you talking about Bob's? I think he published it already, didn't he? On Reddit? You can go look at it. Happy New Year, who's coughing? Worried a whole bunch of people new to options will have arbitrary thresholds like that and then cash settle, leading to a de-hedge and then shorting of the hedge shares. It's possible that greed could take over. But historically, GameStop options holders have held their contracts rather than cash settle them ever since January. So if you're going to buy blocks of 100 shares and don't mind the premium, just do options and exercise. Yeah. You can even get them for cheaper than shares. Like if you do the math on them, sometimes the premium plus cost to exercise is cheaper than the market price. Of course, I'm expecting something to happen this week. Oh, man. What I'm not going to do is be outwardly bullish towards anything because a lot of you guys FOMO into shitty weekly calls when I'm feeling like positive about the week ahead. And so if you're noticing hesitancy on my part to explain what I see coming, I don't fucking know. I couldn't be more clear on that. We don't know how this is going to play out. There is buy pressure. There is gamma exposure. There is a fat chunk of delta they need to hedge. We've got all the stuff. We just don't know if it's going to play out the way we want it to. So if you want me to bark, like if you want me to sit here and jack your tits, you're barking up the wrong tree. And I know a lot of you are just degenerates and you're trying to see if you should buy weeklies. And the fucking answer is no. It's always no. Is there publicly available data that shows when contracts are exercised versus cash settled? You can tell based on the gamma exposure windows. If we had GEX data, that would give you an accurate figure, but we don't. Not accurate GEX data. Like, we don't have anything from like NYSE showing us exercise flow. You could buy it, but it's very expensive. Wink if you're bullish as fuck, but can't say for safety's sake. I mean, I don't have any weeklies right now. I really don't intend to buy very many. If I do buy them, it would only be on confirmed breakouts. See violet upside potential, and I'm YOLOing into 510s this week. Stay strong, be ready for a crazy ride, even downside. I've got 200 settling tomorrow. Hopefully Febs, but price action, may make it a gamble. Thanks, Pickle Morty. Jesus Christ. So much. So much information there. Stop buying 510s. They're the worst. I did see your GIF, Yig style. I did. Based off Bob's FTD numbers, do they have to cover number per number? Or how does that work? So I can explain to the people less aware than I am. I'm not even sure how accurate flow to FTD data is. I think he's just trying to use it as an estimate. Bracco Hawk. All of I'm not gonna lie, all of these questions about like what happens tomorrow FTD wise. The only concern if you have far dated options is if there is buy pressure increasing on the stock. Everything to do with what happens tomorrow and do we run is just a ploy to extract information on whether or not you should play weekly calls. And the answer is no. Weeklies are risky and dangerous, and you'll likely lose your money. Remember Freg's Day? Also, the delta is tiny. Like weekly delta goes way down. Acting career, no problem. How about a Feb 200C for 1K? Am I dumb? I mean, I'm sure they could realize more value than that. Don't forget that, like, also reported SI is going to increase as MMs take the short side of the trade, right? I swear some of us have learned. Flow to the FTD estimate is the upper bound of FTDs to cover. Looking at direct GME short volume could be a middle estimate. The number could always be zero based on the sensitivity. The potential is nuts. I know. It is. The potential is very high. And especially if people hold on to their contracts and exercise them, it could really get fucking crazy. But there's so many variables in that equation that you can't definitively say, like, we're gonna go all the way to the end of the options chain, because we may not, right? If fucking 90% of options holders cash settle at a test of 400, then that's the end of the run. And that's something I nor you can predict or prepare for. It's not trigger. It's not just you, Taximus. I just need to explain it to everybody. Should you gamble your IRS payment, JC? Is that the question? I've I've put out all the information. The sentiment on that information has turned positive. We can hope for the best, but there's nothing definitive to say that it's going to work out the way we want it to. Herva, the volume on Friday was just internalized. Did you look at the? I posted like the dark pool flow in the daily DD on Friday, I think. Don't forget that they can pull all the same fucking tricks they pulled last year. It's just a lot harder because there's no real shares for them to do it with. I wanted to short squeeze just as much as everyone else, but there's a reason short squeezes are a low probability event, right? There's a reason they're called black swan events. It's not because they happen often. Can we see price improvement? Likely. Are we guaranteed a short squeeze? No. Everything is in place for it to work. Synthetically, Herba. Same way they've always gotten liquidity. Yeah, people hold weeklies. That's the biggest problem. I'm guilty of it too. My gains on GameStop are ridiculous, but so are my losses. I've never lost so much money on any one stock than I've lost on GameStop. My gains, fortunately, far outweigh my losses, but the losses are absurd. It is not easy to pin down options on this. And the strategy that we presented is probably the best way to do it. GME is a distraction from DDS. Do you think we have enough options loaded to give us the upper hand? It looks good. I mean, Yelya's DN spike looks solid as fuck. Can you quickly review the option strategy? Yeah. Options with delta greater than 0.3 with at least 30 days to expiry. These are all great. Everything else is pretty high risk. Not that I don't have options that don't fit this, but I have fewer that don't. I think that's, well, the problem is you're not like, and this is where like the further out of the money ones kind of fall apart, is if they're like 0.1, you're probably not getting 3x leverage because of the pricing. So, you know, if they were 0.1 and you were getting 3x, then it's the same as having 1.3, right? But with the pricing, you're really getting like 2.2x leverage. So you're getting like, for the same amount of money, you're getting like 0.2 delta versus 0.3 delta. What's your favorite Disney character? I don't know. Yeah, Wall Street Bets is going to pile into shitty options. And it's true. Once we start winning, those options have a lot of potential. And that's why I hold out of the money options. Like Friday, I picked up some 500s, right? For Fab. But the OI on these will fill up anyway. This isn't important. They'll also be, when FOMO kicks in, if we run, Like, those will be the ones that get purchased because people won't be able to afford at the money options. Well, someone's got to buy 500s if all you degenerates are buying 510s. If I don't hold my 500 calls until your guys' 510s print, who's gonna? Fill the chain. Fuck yes. Buying 500s isn't cash money. I'm sorry I called you a poop, but pretty please. Pretty please what? I don't care, Han. I don't care about Disney characters. I don't like Disney. I think they're an evil corporation and people should not support them. It's such a Jafar thing to say. I waded into the effort to explain why options are helping the cause on Reddit. I came up with a line I'm proud of. Share creation is neither cheap nor unlimited nor forever unreconcilable. Accurate. I'm not getting a tattoo of Aladdin. Path? Oh boy. I mean, it kind of looks like shit, and that people are bag holding it now. I don't even know what they do. That's what the Louvre is for, Han. Just pick your favorite Disney character. I'm trying to keep degenerates from blowing their lifetime savings. And you're asking me who my favorite Disney character is. I can't handle both of those things at once. You're Probably fine if you've bought in the last few weeks, Sammy Yo. Is there anything in place that prevents any Piggly Wiggly style rule changes these days? There's an approval process, so they take time now. Not my life savings, but my kids' inheritance. Big difference. Do the underlying going delta neutral? She thinks it's gonna rip. I've heard her talk about it. It's possible. I don't. Two channel breakout. It's interesting. It could. Volume's decent. I also really like this. This looks very interesting. Similar reasons. Have you pitched your thesis to any big money? Any friends with money? Most of my friends that have money already own GameStop. Or they don't. And they bought other bad plays and lost money this year. Is that an inverted scallop? Is that the case because they're forced to buy all creation shares? Yes, but don't forget, XRT rebalances every day. So then they have to start playing keep up in order to maintain NAV. Scallop. As long as nobody says scallop or I can't do it. Scallopian tube. There's a chance that XRT may not be a big play and the jewel will run on its behalf. Yeah, but XRT will still come up. I mean, Look at what XRT did last January. It went from $64 to $100. Scale up? What? Carmel? It's caramel. It's vase? It's not caramel or caramel. It's caramel. This is the candy. It's got 2 fucking A's. You're a quiche. People saying caramel sauce or caramel sauce is one of my triggers. Crayon? It's crayon. Not crayon. Ugh. Why don't you just stick some fucking marbles in your mouth then? Just pronounce the word properly, Han. There's 2 A's. Crown? Forum sliding. Caramel apple. Okay, first of all, NVIDIA is a fake word. I can pronounce it however I want. If someone asks what you do, show them a clip of the last 5 minutes. I want to get a Discord bot that counts people's gains, so I can tell if it's profitable for me to open an ETF. I already talked to Turd. I think we're just going to open an ETF that 10x leverages GameStop shares. Giftbot. That is a great name. Gherkin's ETF. Or you could do FD. Not the Wall Street Bets homophobic thing. but just to emphasize fucked. I wish you could put apostrophes in tickers. Then people can just pump the ETF. And maximize leverage on GameStop. It's the best idea I've ever had. I'll keep the fees low. I already shorted it. Son of a bitch. Yeah, but XRT ran a lot last year. I ran a lot in Feb too. Like Feb into March. This was its like threshold period. This was from GameStop spiking. Name it Mayo. Can you draw your trend lines on GME for the year on the daily and 4 hour for the past year to see where we're at? Wait, what? Draw your trend lines on GME for the year on the daily. We're below them. I don't know if you'll be able to see it through all this other crap I have on here, but yeah, we're like currently way below the long-term trend, which is like out here. Should we go back above it? Yes. There's also a key here that I made for everybody. It's very pretty. From our current trading price, $3,500. Are you talking about like the Brazilian thing that they blow at soccer games? Google that. Just Google annoying soccer horn. That's the Google search. Oh, I need to see if fucking Cosmic Lightning Warrior got back to me. He wanted me to do a stream with him tonight. Maybe not. Well, he messaged me on Friday, but then I didn't get it. I dropped a link to the TradingView chart in the Discord. It's in the announcements channel. Well, we'll see. He hasn't gotten back to me. And then the real question there is like, am I going to remember to check my Twitter DMs? Probably not.
Vuvuzela or Vuvuzela.
Huh.
Vuvuzela or Vuvuzela.
Interesting. Vuvuzela. Huh. Now have it say lawyer? Why are people saying lawyer? They're experts in law. Lawman. What if it's a law woman? It's pronounced liar. Law person. I think lawyer is already gender neutral. Or attorney. Six months. Did you just write Long Danson? Member 6 months. Would you look at Crocs? I don't want to. More importantly, I don't want to look at people wearing Crocs. Mm. Actually, it doesn't look terrible for a bounce. I just may not realize it. It's cheap right now compared to where it was trading into November, October. I think we close over 200 by end of week. Thoughts? That'd be dope. In the event the things don't go as expected, should we potentially save our Feb calls and roll them out to March, April? Yeah, that's what I'm going to do. So if nothing plays out and January just sucks, by Jan 25th, if I haven't seen any price action, I'm going to roll my calls out to March 18th. And then just capture the OPEC state. I don't think that's going to happen, but that's my backup plan. I think it's just got more downside. Ah. Mm. I don't like that MACD. The MACD crossover is not the worst. Yeah, I mean, I think it can bounce. It's gonna need an uptick in volume. It may take a little while. Like this consolidation may drag out a little while longer. Also, you'd have to look more into Crocs as a company and see how much the interest rate change affects them from the Fed. Like, do they have a lot of growth investment that they need to do moving forward? Which are the OPEC states? Feb's is the 18th, so T plus 2 is 21, 22, 23. Thoughts on Donut? That was kind of like a long play. Is it doing better? Looks like it failed that breakout. It might consolidate. It's hard to say. There's no like history on this, right? It's kind of the problem with playing. This actually looks good. This is like descending wedge from the breakout. I think it could break back to the upside. I would watch like here at $17 for a breakdown. If it breaks down below $17, I would be out. But I think long term, I think it can test its highs again. I've read a little bit up on the company, and like they seem to be well positioned, and they're opening more locations. Revenues are good, so the previous OPEC states are on the charts. Oh, why am I still doing this? This was supposed to be over hours ago. Like November's. See? That's the wrong chart. I don't know. That's on AMD. It'll probably run into earnings. Oh, it's the 4 hour. That's why. Thank you. These yellow dates, these are the OPEX T+2 settlements. August, November. Next one's out here in Feb. I don't have like a type of PC. I just built it myself. Given the juicy data that Zinco is going to drop soon, how do we jack volatility? Fuck, it's tough. Yeah, I'm aware of what Zinco is working on, JFresh. I mean, I think they'll do that. I think just holding the delta when the options change should be sufficient. Exercising will jack up volatility a bunch. Jay Fraish. Yeah, I expect XRT to start seeing price improvement soon as well. Tungsten. Similar to last year, except earlier. I'm seriously in an infinite hype loop. I have no chill. So excited for this week. What has he been dumping on you guys? Was he showing you the delta or the gamma test? The gamma test is bullish as fuck. Also, chill the fuck out. We'll talk about this later. Lots of preservatives, trash Dan. Just proof that they traded Delta for Vega. Yeah, it's pretty exciting. Do you think it's an optimal deployment of capital to focus on GME option chain or to diversify into XRT? Seems like it's the same play with different upside potentials. I think XRT could run sooner, so I put a little bit of money there. It may not, but I only bought like 15 contracts in XRT. I agree that diversification would probably be better in like something like DDS that's more volatile. Or just not at all in order to apply more pressure to GameStop. Although I do see a path for DDS to act as a catalyst. But it may just do that anyway. Like, I don't think DDS cares about the volatility. I think it's just like setting up to be a good old fashioned short squeeze. What's a critical threshold number and price before launch? Before seeing the order book go bonkers, is there a way to know to roll options versus hold for a launch aside a self-imposed date? I mean, if GME slips off of its options chain to the upside with some time left in the trading day, that's probably good. Everything's gonna go boom. Once they can't hedge upside volatility anymore, there's no way for them to control price. Yeah, DDS is, yeah, I agree. It seems more likely for it to rip without manipulation. I think it'll just rip based on the fact that they've created so many FTDs over there. And also there's no shares to borrow, right? So like with GME, when they run out of the ETF pool, right? Then at least they can go to the SEC lending pool. Then squeeze. With DDS, there's no, like, once the ETF pool is capped, which is much smaller than GME's, right? There's like no shares in the SEC lending pool. They borrowed 20,000 shares on DDS the other day, and the fucking borrow rate spiked 30%. So yeah, I think it can just squeeze regardless. Like they can borrow, 500,000 shares of GME in a day with no effect on the borrow rate. So it's, as far as illiquidity goes or shares available to borrow, it's significantly lower. That's just because you're not rich, Sudan Queen. If you're rich, they'll let you borrow as much money as you want. Even if you fail to pay a loan, no one cares. Is that when you turn off the stream? Running out of top end options to hedge the variance is like, we'd probably have already started squeezing at that point. It's just once we slip that and there's no upside hedge, I mean, no one really knows what happens after that. I don't know if that's happened before. You got any more of that quant hype? That's not the way this works. The quants aren't here to hype you up. What do you think the upside potential of DDS is? Looks like it could go to 4 figures. I think that's possible, yeah. I think maybe even like high 4 figures. It's 50% short interest, so I don't know. There's not a lot of turnover to be had there, though, right? It's not like MOAS. It's not going to MOAS, but it could be very profitable. All right, that's enough. I've already gone 15 minutes over. I will see you guys bright and early first thing tomorrow morning. Have a good night, everyone, and thank you for tuning in. I appreciate all the memberships and the support, as always. DDS way greater than AMC. Thank you guys. What is it? Deep fried pickle, praise VWAP. Yeah, of course. Just try to stay, you know, I gave you guys a warning about last week, and I'll give you the same warning again. The shit's gonna get crazy. Try to stay even tempered. Don't let the psychology of the market get the best of you. I see everyone getting hyped, and I feel the need to move in the other direction because everyone lets it. You guys all get in the Discord, and it creates an echo chamber, and you just compound each other's hype. And going into a run like that, hyped, is not a good way to approach it. Stay calm. Remember, it's not money until it's in your bank account. Don't get me wrong. I'm excited too, but you have to temper that. It will inevitably lead to bad decisions if you don't. Yep, it's a video game. We're in it to win it. All right, guys. Have a great night. I'll see you tomorrow.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
I'm not a cult, yo. Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico! Not an advisor. Frigulon.